Hi, it's Larry Gaines from Options on the Open. Just wanted to show you guys a few, or give you a few pointers on the S&P and the market. Obviously, if you'd been following the markets today, you had seen that had a tremendous up move for a lot of various factors, all tied to the European bank situation. But I just wanted to go over some charts and just show you some chart points that may help you to navigate and trade the market in the next several days. So to do that, I'm just going to use the S&P 500, the SPY, the ETF, and by using this ETF, you can kind of get a big, broad brush picture of what's happened and potentially where we're going to go from here. So first off, let me just show you this line here. This yellow line is the 150-day moving average. So you can see we had a huge gap open today from about 121, and then the bottom of the gap is 123. So you've got a $2 gap right here, and then it came up here and closed right on the highs, solid bar, and closed at this descending trend line coming down right here, which comes in around 125, and also comes in right at the 150-day moving average, this yellow line, which is at 125.08. Now this is resistance here. We'll see on the open tomorrow how it handles this descending trend line. This was a very powerful move up, and then this is the 200-day moving average right here that comes in at 126.78, and you can see that we got back up here and broke through this back in October. So in October we had that low on about the 4th, and then we had the high right here around the 24th. So usually when you get this powerful extension like this, you'll tend to have some kind of a pullback, and what you want to look for is to see how much the pullback is. You want to look to see if this can hold this gap up island. So 123, this level right here, is something that you want to pay attention to. So put you in a horizontal line or something and see how the market handles in the first 30 minutes to an hour tomorrow on the open. See what happens with the market as far as this extension and this gap. So see how much of a retracement it can get. See if it holds the low end of this price range and holds into this gap. Now if it holds here for the next day or so, then you might have this island reversal gap, and the market can trade higher from here. You can see a similar situation here where the market gap had this big gap right here. It went from 124.80, it gapped on the open to 126.5, and then the next day it was an inside day. You can see this. You had a big range day. The next day was an inside day. So the market's paused, not sure what to do, and then the next day it came off and got close to filling the gap, and then it did fill the gap. So these gaps are critical to keep an eye on and to see how the markets digest with the gap. So that's one thing I wanted to point out. And then the next thing is to look at, you can look at a Fibonacci retracement levels also from this low to this high, and that will give you some indications of support zones to be aware of. So I'll just put that in real quick. So just take the low here, extend to the high today, and assuming this is the high for tomorrow, so you'll have to wait, but let's say the market comes in like it did here and you have an inside day. So what you want to do is then watch your retracement levels. So this one level, the first level you'll be looking at is the 25% retracement, which comes in right at 123 right here. So you want to see if that holds. If that holds and the market goes higher, then that's a very, very strong support level. You can pull back to the 382 at 174, and if it holds there, that's still good. That's still very positive. But the market has a lot of energy to the upside. The power cycle trading model that we use flipped long today for on an intermediate basis. The macro trend, it still has it down, but in the intermediate term, based like on a daily, the trend is up. So watch for this line, this descending trend line, that will be some resistance here in this 150 day. So see how it reacts there, and then watch the retracement zones that I just laid out for you. Now, one other stock I wanted to show you is Gold Corp, GG. That's a stock that we trade a lot, and it's had a fantastic move today. We did really well on that. Let me just pull that up real quick. So here is Gold Corp, or GG. We traded this stock all day long, all the way to the upside, and did really well on it. It had a huge move. I mean, gold had a powerful move up. It's the risk-on trade now, based on what's going on in Europe. But the thing we'll be doing tomorrow, we'll be looking at the same thing. You had this major gap. We'll see how this range holds tomorrow. So what we'll probably look at doing is put a Fibonacci retracement level in there for the just this whole bar right here, and we'll see how this level holds. We'll see if it can hold back here at 52.50, or let's say it holds at 382 at 52.82, and then we'll trade accordingly. So these will be our intraday support zones for tomorrow based on this huge move today. I'd be surprised if we get a gap fill, so we'll probably have an island gap reversal to the upside here, and then we'll play these retracement levels based on Fibonacci. So hope that helps you in your trading. Good luck. If you'd like to learn how we trade, please come join us at Options on the Open and learn how we use our day trading, power cycle day trading model to help us trade in and out of the market each and every day. Thank you.